Today's Friday, the 14th of January, and the market is still down year to date. We did squeak out a little bit of a gain here in the Nasdaq for the week with today's rally back a little bit. So, tough start obviously for the biotechs. They're the worst. Oil and banks have been leading the way along with energy stocks. So let's look at the stocks or the market and see how to make some sense of it. The longer term chart of the S&P 500, I've got just a 20, 30, and 40-week moving average. Still, we're clearly in an uptrend. The concern here is that from this breakout could be a failed move, which leads to a faster move lower. We're still holding above a key level, which is this 450-ish level in prior resistance, holding as support so far. So when we look at that bigger term picture, longer term picture, it's still clearly in an uptrend. When we look at the shorter term time frame, we've broken this trend line in here that we've previously observed, and we are below the 50-day moving average. That's this thin green line, and the 20-day moving average is a thin blue line. We're below the 20 and 50-day moving average. This is where we were 50 days ago. So as this market gets rid of this data on Monday and replaces it with data down here, that 50-day moving average will be declining. Now, that doesn't mean it has to end this rally. We're holding above the volume weighted average price from the October low. The bottom line is we've got a lot of mixed messages here, and being that I am a swing trader, I focus on the swing trade time frame. Most of my decision making comes from the shorter term time frames, such as the 30-minute time frame. Each candle here represents 30 minutes, and you can see this goes back to middle of last month. So we got about a month of data here. This orange is the 5-day moving average. When we have a declining 5-day moving average, I consider the market guilty until proven innocent. It's only when the 5-day moving average flattens out and then we make higher highs and higher lows above it that I turn from cautious to bullish, and that didn't happen this week. Instead, we got stuck, below that 5-day moving average, and this is the year-to-date volume-weighted average price. It seemed like it wanted to hold above it for a day there, but then we lost it. So going into next week, I think we still have to be pretty defensive. Here's a 65-minute time frame, and we could look at it something like this. So again, we're very choppy here in the S&P 500. Let's take a look at the Nasdaq. We'll do the same thing, which is to take a look at the weekly chart, 20, 30, and 40-week moving average. You can see a little bit worse picture here in that this prior peak, which had been holding as support, was broken this week, and we closed below that level. So onto the daily time frame. Here's where we see the year-to-date volume-weighted average price, which we are currently below, and below this we can take a look at some key volume weighted average price levels, such as from this low and then from this low, and then here we broke below that one. Now we are testing the volume weighted average price. I guess it should be drawn more like this, from the May low, and we bounced from it earlier in the week. I think another test of it and maybe a little undercut. What we often see, and I talk about this a lot, is that we see a slight undercut of a prior sell-off that came with velocity. A slight undercut, take some stops, and then rally back up. So there's no evidence of that yet. We did get a little bit of a rally here today, but we closed right at the week-to-date volume-weighted average price, meaning for the week the average price was basically unchanged. Or right here rather, that's the average price that it traded at, and that's where we closed. We're below a declining 5-day moving average, so we still have to be cautious in regards to this market. Let's clean all this up, and we see the 20-day moving average is below the 50-day moving average, and they're both declining. That again tells us it's cautious. We saw the banks report earnings, and if you'd seen my video last night, I posted it on Twitter. I had said that the stocks that were reporting earnings, such as Citibank, were looking like they probably were due for some pullback because it had run up to last year's volume weighted average price in this prior support. So some pullback wouldn't be come as a surprise. And JP Morgan, same thing. When you see a rally from 153 to 169, buy the rumor and then sell the news here. So financial stocks did sell off a little bit here today, but they closed right at the year-to-date volume-weighted average price, still above the volume-weighted average price from this low, and also right here at near this prior peak. So near term looks like we're going to get a little bit further profit taking, but clearly this has been a leading group. It's been riding that rising 5-day moving average, and now that we've made a lower high and lower low below the 5-day moving average, which is declining, it tells us we have to be a little bit cautious. It wouldn't be a surprise to me to see some further pullback. Perhaps we come down to the volume weighted average price from this low on the 20th of last month, and then start to stabilize and then rebuild from there. The 5-day moving average could flatten out and then turn higher. By the way, you've heard me mention over the last 2 weeks a sale for Alpha Trends. I do that once in a while, and it's going to end on Sunday. So if you're interested, please go to alphatrends.net. I won't give you the long pitch here, but I've been getting some really good feedback on it, and it's really a good deal. So if you're serious about making money in the markets this year, I suggest you take a look there. The Russell 2000, this is really the weakest, and if you look at the weekly time frame, we have been, last year we spoke ad nauseum about this range that we were in, as far as support and resistance go, right down here and then up in there. We saw the failed breakout in October, and subsequent to that, what we're seeing now is the volume weighted average price off of that peak. We're stuck below that, and this week what we had seen was, let me just clean that up a little bit. Here's our year-to-date volume weighted average price. On Wednesday we came right up to that, and that was also the level of the volume weighted average price from the low on the 20th, and that's where sellers came into this market and continued to sell it off a little bit. We still have a declining 5-day moving average, so guilty till proven innocent on the intermediate term, and on the daily time frame we just keep hammering away at this level. Eventually the buyers are going to give up there, or either one of two things are going to happen. The buyers are going to successfully defend this, it can recover, rebuild, and then maybe go from there, or the more times that it's tested, the more likely it is to fail. If it does fail, here are the levels we want to be aware of on the Russell 2000. First of all, we take a volume weighted average price from the low of 2020, and then that's too far away to really be relevant. So what we do is we say, well, where did it last touch that volume weighted average price? Because that's where a new momentum campaign began. So we hand off the anchor right here, and you can see that held for a while, but that's still too far away, I think, to really be something to be concerned about. So we anchor from here, and guess what? Look at where this market is right now. The volume weighted average price from that September of 2020 low, that's what we keep testing in here as well. That tells me also that this volume weighted average price has been holding on a couple of occasions. If it gives up, perhaps we're going to drop down to the next volume weighted average price level where there's price memory, which is around the 200 level. So please be very careful with the Russell 2000. It hasn't broken down yet, but it sure looks vulnerable and capable of a deeper decline. Let's quickly talk about Bitcoin. I haven't spoken about that in a while. This, of course, is TrendSpider software, and on the left I've got a weekly time frame. We saw that this low down here in March of 2020, that was an important low, so we anchor a VWAP there. This was also an important level where the market gained momentum, and then right here, this blue one, that's what we've been kind of holding on here the last week. That is also seen over here on the daily time frame. So this is the same exact volume weighted average price. This thick light blue one is this one right here, and you can see we keep closing above that. So that is somewhat bullish, but we're still in a downtrend overall. Lower highs and lower lows on this weekly time frame. So far, again, we're holding this 40,000 level. We dipped briefly below it this week, and we're right at the year-to-date volume weighted average price. That's this orange line, and the volume weighted average price from that prior peak is overhead. So to me, you look at this, prior 46,000 level, that 45 to 46,000, that prior support has the potential to become resistance. I don't think you want to get aggressive about buying Bitcoin down in here. Maybe you nibble, but the momentum is still clearly lower in Bitcoin. So I would say, things can change quickly, but under 45,000, just be cautious with it. Back to the semiconductors, they had a good day, but they're stuck in this bigger range here. Kind of, who knows, maybe this is going to set up similar to the range that we saw last year develop in the Russell 2000. I hope not, because the semiconductors have provided a lot of leadership in the market, but you can see we're in a range of 287 up to 317 or so. This week we kind of hovered around the midpoint of that. We do still have a rising 50-day moving average. On Monday, we'll get rid of this day right here. So that 50-day moving average is going to start to flatten out, and what that's telling us basically is we're seeing more of a time correction. A time correction is a good thing. We don't know which way it's going to break. Is this accumulation before the push higher, or is this distribution before a break lower? You know what? Just like everybody else, we'll know after the fact. Meanwhile, because the longer term trend is higher, we still do give the benefit of the doubt to the buyers, especially since the volume weighted average price from this most important higher low what has been defended the last couple 3 weeks. So overall, it's more likely to move higher than it is to break down. But intermediate term, it's just a mess. It's a range bound market. There's no advantage of being involved in here. You can look at the volume weighted average price from this gap, and what will it tell us? It'll tell us it's a choppy mess. We're crossing back and forth above and below. So does that make the VWAP useless? No, it does exactly what it's supposed to do. It tells us it's choppy sideways market. Avoid it. Don't waste your time trying to make sense of the semiconductors right now. Biotechs were a disaster this week. They continue to be really the worst group out there. The volume weighted average price from the 2020 low, we had seen, we've been talking about this one a lot. It had been support several times, and we broke that last week. This week we continued lower. Now we have the potential that prior support, that volume weighted average price support, has the potential to become resistance. And then of course you have to look at it this way and say, look at this horizontal level that was prior resistance, became support, and now will it become resistance again? Are these guys set for a deeper decline over time? It sure looks like a stage 4 top to me, and you don't want to sell short after a couple weeks of selling. But if it comes up towards this 145, 146 level next week and then rolls back over, kind of similar to how it did here on Thursday, yesterday, here's our week to date volume weighted average price. It rolled back over, broke this support below the 5-day moving average. It made a lower low, and guess what? It did what it's supposed to do. It's in a downtrend. The sellers re-exerted their momentum, and it's doing again what it's supposed to. Financials we just spoke about. They have been a clear leader here recently. They are back down to this prior band of resistance. Let's see if it sets up as support. Right now, again, it's too early to be a buyer. I think it's more likely, as I just said, for something like this to develop. Energy names have been really the superstars. This group, here's their year-to-date volume-weighted average price and the 5-day moving average. They just refuse to give back. If you saw my video last night on Twitter, I had mentioned some open positions for Alpha Trends subscribers. We're involved in FCX right here. We have 1/3 left of that. We're involved in NOV right over here at $15.30 per share. We bought SLVM at a price of $31.02 right in here actually. We're still long 1/3 of that. We are short 2/3 of a position in Beam from $69.10. We also got long HFC at 35.24, and we're going to raise our stop significantly after this nice bar today, up 7%, and we are short RCII. That is all of the positions that we have open, and come take a look at alphatrends.net. I promise I'll stop pitching it to you here in the next as the sale expires on Sunday. Thanks for tuning in.